Okay, question 4. Arjun is a sole trader. Arjun prepared the trial balance on 31st January 2020. The total of debit and credit side differ. That means difference. The difference was placed in the suspend account. So after that, he discovered all this. Okay, let's see what are the question. Prepare the journal entry to correct the error 1, 2, and 3. So we just put in the journal. Journal error number. Okay, this one is the detail, debit, credit. Okay, the question only asks us to prepare 1, 2, 3, but we can do all as an exercise. For number 1, the error. The total of the discount received column in the cash book January 135 has been credited to the commission receivable. This is a same class but wrong account. So same class, wrong account. This is a same class but wrong account. So this error we call error of commission. So this is to take notes. So the double entry to adjust it. Credited to commission receivable. Commission is a wrong account. Commission receivable is a wrong account, which is 135. And we put back to the correct account. Discount received. Discount received is in the credit side, 135. Okay, just check whether narrative is required or not. Okay, narrative are required. That means we have to write the reason for this adjustment. So we can put in correction of error for discount received wrongly credited to commission receivable. Okay, this is the correction that we make. Okay, second, 200 received from the sales of fitting. Net book value of 150 has been correctly debited but has been credited to the feature. That means here they say that has been correctly debited, but this is a sales of the fitting disposal. Okay, has been 200 received. This is money received, debit bank, credit disposal account. Okay, this double entry should be debit bank 200 and credit disposal account, which is 200. So this is a money received. So they say that has been credited to the feature and fitting. That means feature and fitting account is wrong. So we put in, we reverse. Okay, reverse the feature and fitting. Put into the disposal of fitting, feature and fitting, feature and fitting and fitting account. So the amount 200. Okay. Next is, okay, you need to do the reason, correction of error for receipt from the sales of fitting. So this is the reason that we put. Number 3, cash drawing 40 has been correctly debited but has been credited to the purchases account. By right, the amount. Okay. This drawing, cash drawing should be debit drawing account, credit cash account. But we go and credited purchases. So that means this cash should be in the credit side. Cash should be in the credit side, but we didn't put in. But we go and put purchases. So we had to reverse the purchases, which is debit purchases, and credit the cash. So this is the adjustment. So correction of error for cash drawing. Now, next, number 4. If the question asks to continue, you can continue. If not, you can just stop in here for the question A. Okay. Number 4, the total of analysis column for cleaning in the petty cash book 73 has been transferred to both the cleaning account and the office. That means cleaning account is correct, office expenses is wrong. So we need to reverse out the office expenses. So in this case, one side error, we have to use suspend account, and reverse the office expenses. Okay, so here 73. Okay, so this is the amount that we get. Adjust this one, no need to adjust the cleaning because cleaning account is correct, office expenses is wrong. Next number, okay, you want to put the reason, you can put down. Since that this is the extra, I don't put the narrative already, okay? Question 5. The purchase of equipment 575 has been credited to the purchases repair account. Asset, non-current asset become expenses. So bank account has been, the bank account has been credited. That means this is a wrong class. So we had to debit equipment and credit, but credited, sorry, this one they say credited. So the key is they should be, they credited to the, that means we have to debit back. We have to debit back equipment repair because this should be reversed up. So we have to debit it. This one had to put back. So in this case, both also debit. We have to use suspend account. So here, 575. So take these two amounts, add together. Okay. Now, question 6. No entry has been made for a check payment for office expenses. No entry has been made for check payment. They mean omission. Okay, so this question 6, number 6 is omission. So we have to debit office expenses and credit the bank because it's a check. So 90. Next is 7. A check 69 paid to Simon has been posted to account of Simon. So pay to Simon, pay to Simon, but we go and put in Simon. So Simon should be the one receive it. Simon is the wrong account. So we have to reverse out Simon account. Okay. So pay to Simon, Simon received 69. But Simon is the wrong account that we put in. So this is the error of omission because it's the wrong person, same class. Whereas this one is the omission, error of omission. Okay, so now let's see what else the question asking about. Okay, they asked to prepare the, they say prepare the suspend account, include the original difference on the trial balance. That means they want us to find the opening balance. So put into here to see easier. Okay. We do not know the opening balance, whether it's in the debit side or credit side. So 2020, January 31st. So we just leave the first row first because we don't know debit or credit. Based on the adjustment that we made here, those accounts needed the suspend account. For example, this one. Okay, and then what else? Here, one more. suspend, and then, okay, that's all, just 2 only. Then we put in. Here is debit, so we put debit. We put office expenses, opposite account, always remember it's an opposite account. So the amount 73. And then come to this one, this is in the credit. So we put in into the credit. So this one is how much? 575, 575. Because it's only 2, so that means we should have this side balance. So in this case, we bring this one up. Okay, so subtotal. Okay, here take the credit minus 73. So we get this one, balance brought down, or we can put, if you don't want to put balance brought down, you put the trial balance difference also can. Okay, so this is the account that we get the amount 1077. Okay, the next one. Okay, in complete the table by place, indicate each of the area will affect the Arjun capital account. So let's see what's the information. We go to the all the adjustment that we made. Okay, I type in the impact, the info first. Error number. Error number. Increase capital. We decrease capital. No effect on capital. Okay, let's see. 3, 4, 5, 6, 7. They want this few only, this few only. So we go up to the side by side. Look at all the journal entry that we made. Okay. For number 3, debit purchases. So here, cash credited, cash reduced. Okay, this one is cash reduced, but this one is the purchases before the, is that what it say? Let me go back to the question again and check one more time. What is the question they asked? Okay, complete the following table by place a tick in the correct column to indicate how each of the error will affect. Okay, this question they asking is before the adjustment. I mean, before this adjustment, this information, this number is 4C. They're asking that before adjustment, that means before the journal, what is the impact? Okay. Now, let's see number 3. Cash drawing has been correct. Read debit but has been credited to the purchases account. When credited to the purchases account, credited to purchases account, cost of sales decrease. When cost of sales decrease, profit increase. So profit increase, capital increase, because profit is under the capital. section. So this is the first impact that we get. So means this one is increase. Okay. Next is number 4. The total of analysis column for cleaning in the petty cash book has been transferred to the both cleaning account and the office expenses. Office expenses is expenses account, which is expenses overstated. So office expenses increase. Expenses increase. Profit decrease. So profit decrease, capital decrease. So our capital decrease. Okay, next. On 4, the total of the analysis column for, okay, sorry, this one 4 done already. Question 5. The purchases of equipment 575 has been credited to the, okay, when we credited, expenses credited. Okay, this question is expenses credited. When expenses credited, expenses decrease. Decrease. When expenses decrease, profit increase. So profit increase, capital increase. So this one, capital will increase. Next is that on 6, no entry has been made for the check paid for. That means office expenses understated. Office expenses understated. Okay, expenses understated. So expenses understated, profit will be overstated. Profit overstated, capital overstated. Overstated means the increase. Okay. Next. A check 69 paid to Simon has been posted to the, so you notice that both are the same, not related to the Simon and Simon are trade payable. So it will not give impact, no impact to profit. So that capital also no effect. So this is the last one, 7, no effect. So go through one more time, read through the notes about the effect on this 4C. So I copy paste into here. So this is for this answer. Okay. So now let's move on. Here that D, they ask that state the 3 advantages. Okay, what is the benefit of as a sole trader? Number 1, easier to make decision because everything is by the owner, because only the owner can make decision faster. Okay. Second is that in terms of setup, easier to set up the business. You just need to register your business, then you can start to do the business. Okay. Number 3, it will be easier for the person doing the account. Sole trader compared to the other business is the account is easier to manage. Account is simple compared to other type of businesses. So there is a benefit that you can talk about. One important thing, why people like the sole trader, because profit does not need to share with others. So there is a best thing. Okay, that's all for the question 4.